Precious metals have historically been used as a way for investors to reap the benefits of diversification and to hedge against inflation, with gold being the most common precious metal for us investors. Silver, palladium and platinum can also be added to your portfolio, but come with their own individual risks and rewards of holding them. In this video, we will find out about what precious metals are, the ways that you can own them, and why you should consider investing in them. We will also look at the different opinions of professional investors to see if precious metals are a sensible investment for you. If you enjoy the video, please like and comment so we know if you like the content we publish, and consider subscribing if you haven't done so already. We'll start with gold. Gold historically has been used as a form of money, used as a relative standard for currency equivalents for individual countries until recent times. Gold has its individual advantages, including its ability to not corrode, conduct heat, or inability to break or crack in construction. So what does this mean for investors, and why should you invest in this metal? Well, because of its durability, it is sought out as a store of value against political and financial concerns. With regards to financial uncertainty, this generally means that the public's faith in banks and cash in general is seen as questionable. As a result, people flock to gold as a safer store of value. As demand for gold increases, with supply factors remaining unchanged, the price of gold increases. As for silver, prices are more subject to the metal's industrial uses as well as its store of value. Silver can be used in dental alloys, batteries, and even photography due to its light sensitivity. Because there is more dependency on its industrial demand compared to gold, the price of silver is generally more volatile in the markets. Platinum is much rarer, but like silver, its price is more heavily influenced by its industrial purposes. It is used in the manufacturing of cars to reduce harmful emissions being released from burning fuel, but after that, a lot of the demand simply comes from jewellery. And finally, possibly the precious metal with the most industrial demand is palladium, used in the manufacturing of dentistry products, along with chemical and medicinal purposes. One way to own them is by simply buying the physical coins and bars. This is also known as bullion. This is owning the metal with the most certainty. You own the asset. It's not just a price on the screen, it's actually in your physical possession. This does come with some disadvantages. Most notably, you have to store the metal. Let's say you own bars of gold and want them in safe storage to avoid theft. You have to pay to store your gold, which can be burdensome. In addition to storage costs, bullion is not necessarily the most liquid of assets. It can be more difficult to sell in comparison to alternative methods of ownership. You may have to go to a specialist dealer in precious metals in order to find willing buyers. Alternatively, you can also invest in commodity ETFs for precious metals. ETFs can be bought and sold on the stock exchange, making them more convenient and liquid in comparison to owning the physical metals. While this does make investing in precious metals more convenient, ETFs do not grant access to the physical metals, which, in a complete financial meltdown, does not necessarily mean you will get your money back. Next, you can choose to allocate your investment funds into a CFD, or contract for difference. This is a contract between an investor and an investment firm or other financial intermediary. When the contract expires, both the investor and the investment firm exchange the difference between the opening and closing price of the asset. This results in a gain or loss to the investor. Finally, you can also invest in the mining companies of the precious metals. The value of the share prices of these companies is related to the price movements of the metals. There are other fundamental factors that influence the share price of these common stocks, but be aware of the real-time price movements in the metals that they mine. An example of this would be Barracks, who mine gold. So now you know some examples of precious metals and the different methods of owning them. What about their historical average returns for us investors? According to macro trends, the value of gold from 1969 to 2019 has increased an average of 10.1% per year. In that same period of time, silver has increased 12.98%, compared to the S&P earning an average of 8.53%. Precious metals can be used as a way of driving good performance in your portfolio, but also come with another advantage: diversification. More specifically, precious metals like gold and silver are weakly correlated to the stock market. Meaning, as the value of the stock market increases, this does not mean the value of gold will follow in the same manner, and vice versa. This can help protect your portfolio in downturns by reducing the losses. Most notably, during the financial crisis of 2007 to 2009, the value of gold returned 20.88% on average over those 3 years. Compare this to an average of minus 3.84% for the S&P 500 stock market in that same period. Ray Dalio is the founder of Bridgewater Associates, the largest hedge fund in the world, and he has been very vocal about adding gold to your portfolio as a diversifier and reducing the correlation of the assets that you own. Here is what he thinks about gold.
You have to have a well-diversified portfolio. And first of all, you have to be global, and you have to have balance. And I think, I don't want to grab, well, the headline's going to be, again, anyway, I think that you have to have a certain amount of gold in your portfolio, or you have to have something that's hard. I know this is going to be the headline of gold. I want to emphasize a bit of gold is a diversifier, okay? And that's the advice I can give. I know I'm going to come out of here like Ray Dalio's wild on gold, and that's not exactly.
I'm going to say cash is trash is your headline.
But cash is trash, but great.
To round up this video, precious metals have long been sourced as a store of value against uncertainty in the political and financial world. Gold and silver are the two most common, but platinum and palladium also have their uses. There are multiple ways to invest in them. It is up to you to figure out which method suits you the most. You must consider fees, liquidation, and overall convenience. If you've enjoyed what you heard today, please leave a like to improve the YouTube algorithm. Comment to leave your feedback and subscribe if you haven't done so. Thanks for watching.